The number one question I've gotten on YouTube in 2024 is, should I invest my money into the stock market today because the stock market is at an all-time high? Now, I understand why people are asking this question, because people are worried that if the stock market is peaking and I invest $1,000 into the stock market today, what happens if the stock market crashes tomorrow? And then I would see my $1,000 investment fall to $500 next month. Nobody wants to see that happen. And this is why so many people are worried about the health of the stock market, because nothing can go straight up forever. So what I want to do in this video is talk about, number one, what's going on in the stock market, and then talk about, well, what you should be doing with your investments, especially when it comes to the stock market at an all-time high. Now, just to lay the foundation of where we are in the stock market, the S&P 500, which is a group of the largest 500 companies in the United States traded on the stock market, this has just broken a brand new record high last Friday, and it is up 4.5% for the year. The Dow Jones is up 2.5% for the year, which also broke a brand new record high last Friday. In addition to that, we just got our most recent jobs report for the month of January 2024. And what it said is that in the United States, despite the layoffs that we saw, the United States economy saw more than double the expected jobs. The economy was expecting about 176,000 jobs to be added, but in reality, our economy added 353,000 jobs to our economy. In addition to that, inflation is now hovering at around the 3.3% if you look at the reported CPI numbers. And in addition to that, we have numbers saying that the American consumer is still strong and spending the money. This doesn't necessarily mean that they're investing their money or they're making the best financial decisions. It means they're still spending their money, keeping the economy going, which then begs the question, are there risks in our economy today, and should you be concerned about investing your money in the stock market? Now, this is where I do want to let you know that tomorrow, February 6th, 2024, I'm hosting my first ever live wealth building workshop for 2024, where I'm going to be going over, number one, the changes that we're seeing in our economy, and number two, how you can capitalize on some of these changes, because you have a great opportunity to build wealth in 2024. And I'm going to be talking about different things that you can do to build a financial system, to start investing for cash flow, and start building your wealth in 2024. It's a completely free workshop. It's live. I'm hosting two sessions, one in the morning on February 6th and one in the evening on February 6th, and it's completely free. So if you'd like to join me on this live wealth building workshop, all you have to do is register using the link down in the description below, because there's a limited number of people that can join me live. I would love to see you there. It's going to be a lot of fun because it's my first time doing it live. So if you'd like to join me, all you got to do is click the link down in the description and register to join me for my first ever live wealth building workshop. So now the question is, what do you do with your money? And there's two things that I want to talk about. Number one is I want to talk about the practical nature of investing for the majority of Americans. Because the reality is, for the majority of Americans, I'm talking about 98% of America, you should not care about what's happening in the financial news. You should not care about what's happening in the financial headlines, and you should not care about the day-to-day swings in the markets. For the average person, the average investor, all you need to do is keep investing your money into the market every week, every 2 weeks, every month, and not change this system. It does not matter if you're reaching a record high. It does not matter if the stock market is crashing. You keep following the system. And the only time you want to consider potentially changing the system is when the stock market is crashing, because you can use that as an opportunity to buy even more aggressively. Now, the reason why I say this is because the stock market in the United States will crash. It's a fact. We have seen a stock market crash happen pretty much every decade for the last century. The last stock market crash was, of course, 2020. The stock market crash before that was 2008. The stock market crash before that was the year 2000/2001. And what we've seen is that these types of stock market crashes have happened pretty much every decade for the last century, and will continue to happen. And not only will they continue to happen, they will probably get more severe. And the reason why they'll probably get more severe is because we have more debt in our system. We have a lot more free money in the system. All these things create more volatility. Now, that being said, if you take a look at the stock market for the last 100 years, what has happened? While we have seen these booms and busts, the stock market has grown for the last 100 years despite the busts. So now, even if somebody was investing their money right before the 2008 crash, well, if you held on to the right assets, well, you would have made money. If you invested your money right before the 2020 pandemic hit and the market shut down, if you were holding onto the right assets, you would have made money relative to where we were back then. Now, the reason why I say the right assets is because the average person doesn't need to play the game of trying to pick the right stock, of trying to play this picking investment game. Because instead of doing that, the easier and more financially available option is just to invest your money into the stock market. Now, listen, I'm not a financial advisor. I can't tell you what to do. I don't recommend anything because, well, I don't know your financial goals. I don't know your financial risk tolerance. I don't know what you're looking to do. But all I know is that for the average person, when you try to pick stocks without understanding what it is that you're investing in, without understanding how to read the financial statements, without understanding how to listen to an earnings call, without understanding the psychology of investing your money, you are playing a losing game. Most people are going to lose like that because number one, you have no idea what you're investing in and you have no goals of how to invest your money. So now when you try to find the next Tesla or the next Amazon or the next Meta, well, if you don't know what you're doing, now you're just gambling your money. And that's why for the average person, the most accessible way to build wealth is to invest your money into funds, whether we're talking low-cost index funds, ETFs, mutual funds that give you exposure to a group of companies. People like to call it a basket of stocks. This is an index. For example, there are funds that give you exposure to the S&P 500. I talked about that in the beginning of this video. The S&P 500 is the 500 largest companies in the stock market. So now, if you invest in a fund that gives you exposure to the S&P 500, and as a disclaimer, I have some of my own money invested into funds that give me exposure to the S&P 500. Well, now what happens is every time you invest your money into this fund, you're buying a little bit of these 500 companies. Now, of course, you're getting diversification. Now, of course, maybe you might not be getting the best returns if you invested compared to if you invested your money into Amazon before it was Amazon, but you're also lowering your risk. And the way that you win with this type of strategy is every week, every 2 weeks, or every month, it doesn't matter. You just keep consistently, passively, and automatically investing your money no matter what. Doesn't matter if the stock market's going up, doesn't matter if the stock market's going down. You keep investing your money. For me, and again, I can't tell you what to do. I'm not telling you what to do. I'm telling you what I do. For me, every Wednesday, money leaves my checkings account and is automatically invested. So now, let's talk about this. The stock market is reaching new record highs. What am I doing? My passive investing system keeps buying more. I don't care if the market is reaching new highs. I just keep buying. If the market were to crash tomorrow, I'd keep buying. If the market were to get cut into half tomorrow, I'd keep buying. This is how the vast majority of America can build wealth, is by passively investing their money. And the reason why I say this is because when people get into this game of trying to pick investments, trying to pick stocks, trying to find the right company, trying to buy it at the right time, most people will, number one, pick the wrong thing, or number two, not know when to buy or not know when to sell. And so when things go wrong, they panic, they sell, they get out too early, they buy too late, they buy too soon. They don't know exactly what to do because now you're competing against people on Wall Street who do this for a living. Now, sure, sometimes you can win, but if you're playing this game without understanding the rules, without understanding the education, you're gambling because now you're playing against the big dogs, people who have a lot of resources, a lot of education, and a lot of money to beat you. So understand that. Now, I'm not saying you shouldn't invest in individual companies. You got to understand the risks. I also invest in individual companies. And when I invest in individual companies, it's a very different strategy than my passive strategy. When I'm investing in individual companies, now I'm looking for a good price for me to come in and buy. Once I find a good company, all I'm waiting for is a good buying point. And again, if markets fall, if the stock falls, well, now this creates an opportunity for me to come in and buy, but I also want to pay attention to what the company is doing. I also want to pay attention to what the earnings are saying. I also want to pay attention to who the executives are. I also want to pay attention to the financials of the company. I want to pay attention to what this company is doing. So now these are two completely different games. And this is where you have to understand what is the game that you want to play. Do you just want to invest your money and become wealthy? If so, you got to stop trying to find the next Tesla, the next Amazon, the next Meta. And you got to just understand that the way that the average person has become wealthy in the past, statistically, it's about putting your money into the market. Because now you can find the right fund for you. Maybe you want to invest in dividend-paying companies. Maybe you just want to invest in the stock market. Maybe you want to invest in the S&P 500. Maybe you want to invest in the Dow Jones. You pick what it is that you want, but you just keep regularly throwing your money into this thing, whether the market's up, whether the market's down. Now, of course, if the market is high, there's a chance that the market can fall, but there's also a chance the market can go up higher. Nobody can perfectly predict what's going to happen tomorrow. What I can tell you is the market will crash. We have risks in the economy. We have risks with our currency. We have a whole bunch of risks with inflation. We have risks with interest rates. There are red flags in the economy, but that should not deter you from investing your money. Now, again, if you want to then capitalize on when those opportunities happen, all you need is some cash to be able to go out and capitalize on those opportunities. But that doesn't mean you need to wait on the sidelines until that perfect opportunity arises, because the people that are always waiting on the sidelines are the people that are losing the opportunity to make a lot of money. And this is where you got to understand, what is your strategy? For me, again, I can't tell you what to do. For me, I have a passive strategy. Every Wednesday, money is going into the markets. Doesn't matter what's going on. But I also have an active strategy where, guess what? If the markets were to crash tomorrow, I'm going to come in and I'm going to buy aggressively. I'm going to buy whatever I can, because that's an opportunity for me. And now this is where you have to understand your strategy and understand that for the average person trying to build wealth, trying to build their financial freedom, trying to build their retirement, it's not by trying to find a perfect stock at the perfect price, because most people have no idea how to do that. Instead, it's just by letting the markets do its thing. Look at what Warren Buffett says. It's not timing the market, it's time in the market. That's where the real wealth is built. And understanding that you just got to keep slowly chipping away at your investments if you really want to have an opportunity to build wealth. That way you don't got to worry about all the little stuff that's happening in the economy and the headlines. You don't got to worry about the day-to-day swings. You just turn on the automatic investments and let the markets do its thing. Now, the last thing that I do want to talk about on this is this concept of buy the rumor, sell the news. Because there's a lot of hype about interest rates going on, where when the Federal Reserve Bank cuts interest rates, we don't know when it's going to be, but when the Federal Reserve Bank cuts interest rates, that the economy is going to boom even more, markets are going to rally and all this stuff. There's a saying on Wall Street, I just said it, buy the rumor, sell the news. And what that means is, when you have these types of exciting events that everybody understands, the real excitement in the markets is during the rumor phase, before it happens. Because then when it happens, that's when you have a lot of Wall Street people that sell the news once that thing actually happens. Now, again, I can't tell you what's going to happen in the future, but I want you to understand now the mindset of Wall Street investors, because when everybody knows something, it's common knowledge. It's not giving you an advantage on somebody else. And so when people think that they're smart because they're listening to what's happening on CNBC, well, guess what? Everybody else is listening to CNBC as well, and that's not giving you an edge. That's just leaving you at the base. So understand now, when you're trying to time the markets, who you're playing against, understand that there are always risks in the economy and the stock market, but the real way that you build wealth is just by owning a piece of the economy and constantly working to increase how much of the economy that you own. And if you want to play the game of trying to invest in individual companies, great. Understand the risks and understand that that's going to take more financial education as well. Now, of course, I'll be talking more about this tomorrow on a wealth building workshop, February 6th, 2024. I would love to see you there. And I got the link. You know where it is, down in the description.